Greetings, everyone. We appreciate you attending our Mastering the Mortgage Game webinar series. It's a collaboration between On-Course Learning, Scotsman Guide, and the featured top originator, Damon Germanides. Today, our focus will be Damon's journey, where he not only achieved recognition as a Scotsman Guide top originator, but also emerged as a leading expert in non-QM mortgage originations. This webinar is scheduled for approximately 25 minutes, followed by a Q&A session afterwards. We'll gather the questions submitted in the chat and then answer them at the end of the webinar. So to kick things off, let's begin with some brief introductions of On-Course and Scotsman Guide before diving into our conversation with Damon. My name is Todd Bellmond. I'm one of the principals at Scotsman Guide. I do a lot of the marketing and circulation, all the fun stuff over here. And I was actually one of the original architects of the top originator rankings. So back in 2008 is when our first year we produced these for the 2009 rankings, right? And then, so let's move to the next page. And first thing I'd like to take a moment just to highlight Scotsman Guide's originator platform. We have our comprehensive platform encompasses our residential and commercial magazines. They have lender listings, lender directories, the award-winning content, and of course the annual rankings. The lender search marketplace has a quick, really simple search that can quickly connect you with residential and commercial lenders online. So if you want to go analog, stick to the magazines. Digital, go to lender search. And of course, our originator, which is our daily newsletter that we send out daily. So as a token of our appreciation, each of the registrants will receive a complimentary 3-month subscription to our residential magazines and daily newsletter. The first edition you'll receive is going to be the January edition. However, you will have access to our digital magazines by next week, and we have archives going back to 2009. This subscription will keep you informed about the upcoming rankings, which are really literally just around the corner. Speaking of which, the 2025 top originator ranking submission period is open January 1st through the 31st. Cutoff for this year's rankings are 30 million in production or 75 closed loans. With that said, I will hand it off to Angie here, who will be hosting the webinar. And it's all yours, Angie.
Thank you, Todd. As Todd shared, I'm Angie Crippen, National Business Development Director here at On-Course Learning, and we're delighted to co-sponsor Mastering the Mortgage Game, and I look forward to engaging with top originator Damon Germanides here shortly. Here at On-Course Learning, our commitment is to serve as your comprehensive resource by tailoring a solution to meet your requirements and to be a one-stop shop. Whether you seek continuing education or if you're looking to onboard a new group of MLOs that you need trained and successfully pass the UST swiftly, or if you need job knowledge, sales, or compliance education, we've got you covered. And please note that there are 3 states that have already had their state-specific deadlines passed, and there are another 8 that are coming due at the end of the month and on December 1st. So make sure that you're paying attention to the state-specific continuing education deadlines just to make sure that you stay compliant. As always, if you have any questions, you're more than welcome to reach out to myself or any of my colleagues here at On-Course. We're always more than happy to help you out. So with that being said, I would like to now introduce Damon Germanides. Damon is the co-founder and broker of Insignia Mortgage based in Beverly Hills, California. With a career spanning over 19 years, Damon has consistently been at the forefront of the industry, specializing in crafting non-QM mortgages tailored to high net worth and high-profile clients. Having started his career with CS Financial, he partnered with Chris Fury to launch Insignia Mortgage in 2012. In 2021, he co-founded Insignia Capital Corp, a direct bridge and fix and flip lender. In 2022, Damon closed more than $285 million in originations, placing him number 27 in the Scotsman Guide top dollar volume list. Additionally, he ranked highly as the number 4 top broker, number 4 top jumbo originator, and number 3 top non-QM originator. Ladies and gentlemen, Damon Germanides.
Hello, pleasure to be here. Thank you so much for having me.
Absolutely. No, it's definitely our pleasure. We appreciate you taking the time out of your busy day just to be able to talk with us in the audience and hopefully shed some light. And as many of our audience members are veterans, but some of them are green and maybe even just thinking about getting in the mortgage industry, I think that what you're going to share today is definitely going to be so helpful. And I kind of wanted to start off, as we know, the topic of the conversation is mastering the mortgage game. And we're doing an additional highlight on non-QM loans. And to me, you provide a wealth of knowledge. You've been in the industry for over 19 years. You have had various roles serving as an underwriter to broker, co-owner. And I feel that your origin story is very relatable. Can you share with our audience how you got involved with the mortgage industry and at what point you knew that you wanted to make a career out of it?
Sure, happy to. After college, I went into the family business, which was a restaurant business here in Los Angeles, and was involved with that for about 8 years. And after doing that for about 8 years, realized it was not for me. And I went back to business school right around the time of around 2001. I started business school, finished around 2003. So it was a bit of a rough time in the economy back then. And as I was finishing up business school, one of my colleagues was involved in the mortgage business, and he thought that would be a good second career or a transition career for me. So that's how I got into it, and that was the starting point. That was a launching point for me to get into mortgages. Was just through business school relationship.
Fantastic. And at what point, when you had started, when did you say, you know what, this is more than just kind of a get me by? You really liked it. What was kind of that ticking point?
Well, it's interesting. I enjoyed, I started off cold calling, and that had its sets of challenges because we're going back to about 2004. It was a different market, but I enjoyed interacting with people. I enjoyed that it was essentially kind of like your own business within. And then I also enjoyed the more technical part of the business. Having to read about the economy every day, following the bond market, seeing what was going on, being able to convey that to people, why rates were going up or down, and what was happening. And so that was kind of the launching point in terms of what got me hooked, was the sales side, the idea that you could really develop your own business within a mortgage a platform, and then the technical side. So you got a little bit of everything in this business. And every day there's something new. It's a brand new day every day in this business. And then relating it back to the restaurant business is, as I started to do well, it was, I always say as hard as the day was in the mortgage business, it was really nothing compared to the difficulties of running a small family restaurant. So.
Imagine. And I'm sure that your family missed you, but obviously very proud of the accomplishments that you've had after you made the transition over to the mortgage side. So,
Yeah.
um, reflecting on your early days as a broker, what aspects of the job did you find most challenging? And even today, obviously, we have a new market going on right now. How did you overcome those early challenges and those continuous challenges that are evolving?
In 2004, 2005, it was a different market. There was not really a vigorous underwriting of files at all. It was really just, pull a credit report, grab a bank statement, if you even had to grab a bank statement. And, there was 100% financing. There was negative AM loans. Every bank and mortgage bank and lender out there was fighting for business. So it was one of those things where you were going to get tested because everybody had their guy or their girl that they used, and there was really it was more about networking, and if you'd been in the business and caught the wave as the business transitioned, you were really ahead of the game. Breaking in was really hard, and so it took time and patience and effort, and really the big break came when the financial crisis hit, and the business wasn't about just who you knew and how many people knew you. It was really about, could you execute? And that kind of really suited my skill sets. So I was able to, take the call, and I was willing to do the extra work to really learn the new guidelines early on and understand cash flow and tax returns and all the things that, many of us had not known about until after the great financial crisis hit and the Dodd-Frank rules and everything else that were coming down the pike that changed the way we underwrote loans. And so that was a differentiator for me. And then in 2010 or 11, partnering up with my current partner, Chris Fury, we decided that we were going to partner up and we were going to go after more difficult loans. And we were going to find a lender or group of lenders to actually, underwrite and take these loans on. And that was really what transitioned us into this non-QM world. Is we were able to, we were able to transition to a business that we weren't going after the vanilla type deals. We wanted the hard deals. So we were early on that. So we were doing non-QM loans before there were non-QM loans. We had found banks and credit unions that were willing to do what we called individualized lending. Look at a file by file and lend on that if they liked it. So that was really the Kickstarter for the Insignia journey.
Pretty awesome. Obviously, looking in outside the box, what's not being developed by all of the other mortgage companies that are out there, and finding that niche. And obviously, it's worked well for the company. So thank you for sharing that. And obviously, before you became a broker, you were, an originator, and mentorship is hugely powerful, and obviously making folks stay in the industry, especially right now. What would you say are some of your tactics and your strategies that you focus on when you mentor the originators within your brokerage?
So, we have seasoned professionals, so we're able to collaborate. And one of the things that we do, again, my partner and I, is we practice what we preach. So whatever we're telling our team to do, we're doing it ourselves. So we're not sitting in an ivory tower behind a desk saying you should be finding more loans. I know personally, how difficult it is to find a loan in the market today with what's happened with interest rates and everything else. It's a challenging time. I would actually argue it's probably even harder today than it was after the financial crisis, because the Fed is not your friend in this market. They want higher rates. They want people to stop spending and speculating, and the banks are full of very low rate mortgages, and so they have balance sheet constraints. So, very challenging time. So what we do is, I think a great case study would be we brought over recently an originator who I knew for a long time, Scott Seeley, been in the business many years, and he never did construction lending. So we were sitting down telling him about some of our niche programs. We have some construction loan options. So we walked through them, got him the basics. He went out, hit his network, and lo and behold, he's got $2-3 million plus construction loans in. Can't say if 100% they're going to go through, because again, the market we're in, but these are good deals, and they in my opinion, they should work. So that's kind of how we mentor and mentor our guys, is try to get them outside the box even further with the products that we have to offer.
Sure. I mean, especially for newer and even veteran that have you done a particular loan for so long, that's your kind of go-to and what you're comfortable with. But yes, getting outside the box could just open up more of a network for you to be able to get more loans funneled in your channel. So great. I like that. Part of our initial conversation when we were meeting was you mentioning industry knowledge and expertise being key to a new originator's success. How did you hone your product expertise?
There's just really no easy way, right? It's just you gotta read guidelines, you gotta get comfortable reading rate sheets, taking notes, building a grid, especially in today's world, because there is so many lenders. It's such a fragmented business right now. So it's there's no way around it. You have to be disciplined in your daily approach to reading and researching and marking down the keys that each of the lenders that you work with will do a deal. And then when you get that deal, find a way to easily be able to, look up the lending pool that may be interested in that and match that lender with that borrower. So, it's just basics.
Yeah.
And I will say, knowing the guidelines, a lot of loan officers, I think, make the error here, again, real world application, is they rely on their processor becomes more than the person putting the file together. They become the pricing desk. They become the person to call if the lender will do the exception. So it's great to have your processor know that, but you should really know it first, and then hopefully be at a point where you're so busy that you need that processor to be helping you. If you're not busy, I've always advocated you should be doing some of that work, because the better you know your guidelines and the product mix, the better you're going to be in front of your client. There's going to be no hesitation when you're calling on one of these loans. They're going to say, this guy knows, or this lady knows her stuff right away. This originator's on top of it, you know?
Well, absolutely. Yeah, being a product expert, it definitely will get you a lot farther, and you don't want to be on that call saying, "Oh, I don't know that answer." So, yes, being the person that knows every step of the process would definitely be beneficial there. And as I mentioned initially, that we wanted to do a little highlight on non-QM, because obviously, to me, you're an expert in this field, and you've produced over $250 million in non-QM, and your company has produced nearly $1 billion. Can you explain to the audience what a typical non-QM loan may look like and when to offer it to a client?
Sure. You know, I mean, a typical non-QM loan, I mean, just by, definition, it's going to be, choppy income, or new employment, or some type of credit event that happened on the credit report that either affected the score or affected the profile of the credit. It could be someone buying an investment property, just not wanting to get into their financials, so a debt service coverage ratio type loan. Could be a bank statement loan. It could be a foreign national loan. Anything that's out of the box, out of the traditional lending box. And so the way that the way we look at loans is we always try to start, the goal is to always start with the complete file, the tax returns, unless of course the borrower's like, look, I'm not sending you the returns. That's, then you don't push it if the client's like, I absolutely don't want to send the returns. But we do like to start with a full application. We have Neil Patel and Michael Nasri in my office are very, very adept at underwriting cash flows and looking at files and making deals work. So we want to try to get the client the best deal we can, and then work our way from the best deal to the least best deal. And so we will work that. We will work that from a fully documented file, and then weed it out to where the loan will work based on these different non-QM, what I call nichier programs, right? So, and that's the way we can, explain to the client why they're not getting the best execution or the sharpest pencil loan program. And they have to, this is the way that the loan can, this is the loan that fits their financial profile. So again, it's a little bit more work, but it also buys in a lot of goodwill with the customers, and they tend to come back because they know that you're going to go through everything really in great detail for them. And it really builds a lot of, what I believe is a lot of sticky clients. They will call us on everything. And if we're not the right fit, we'll tell them, hey, you know what, you're at the right place. So that's our process.
And part of obviously creating that client relationship and having them continue to come back to you, especially when you're working through such a tough deal with them, how would you create that stickiness to, to kind of set them up for success? Like when this changes within your income, or when you have this, come back to me, like how do you really help the client in that type of situation?
Sure. Well, yeah. So by getting the whole package up front, or getting most of it, you can see where the trends are, right? So you can also say, hey, this non-QM mortgage is going to fill the immediate need. And obviously in today's market, what's happening, most people who are buying out of necessity. Your second homes and your kind of vanity purchases, they're few and far between in today's market. It's really people who need to move for a reason. So even if they can't quite get the loan program they want, and you can show them, like through your conversation, that look, we're going to put you in this loan, but you're trending the right direction, and assuming that rates don't do something wild, you should be able to get into this lending program by the next tax filing, or 6 months of additional pay stubs, or whatever it might be.
Right.
So those are the general. That's the general pitch. Essentially, is communicating that to the client.
And what would you state would be some of the keys to success from originating non-QM products?
I think honesty is important. Like, this isn't the best loan. Like, a lot of times people don't want to say that up front. Oh, this is, they use that. Oh, this, this is a loan that is being priced commensurate to the risk of not having a perfect financial profile for what the traditional lenders want. So I think that's important. Being upfront. We employ a rate offer letter prior to the loan estimate going out when we're talking to the client, so we don't have a complete file. Just setting the expectation right based on what we've talked about, where we think that what our feeling is where the loan's headed. So the client knows the cost, the rates. There's no mystery. They're not going into a 100-page loan estimate, finally figuring out that the rate is not 6, it's 7.5 or 8. Like,
Right.
Why deal with all that? We've always felt that we should be upfront. We're very, very to the point, very upfront, very transparent, and it's done fabulously well for us because the clients know exactly what they're getting into when we take a loan on. So I think that's key. And then again, knowing a bit redundant here, but knowing the file inside and out, you will get the buy-in from the borrower because they're just not going to feel like you're just putting them into some easy loan. They're going to say, like, this person did the work for me, and you could sometimes we'll even say, you know what, go to your primary lender and see if they'll make it work. Our analysis is you don't qualify based on the general, traditional guidelines. Maybe they'll make an exception. If they don't, we're your second best thing. We're happy to be second, So we don't hard sell or anything like that. We kind of just present it to them and really clean and upfront and honest. And again, it's just the right way to do it, in my opinion. And it leads to tremendous buy-in.
I would agree with you. I would definitely agree with you. And today on our webinar, we wanted this again to be interactive. So we have designed extra time to be able to ask Damon those hard-hitting questions, whether it be about his personal success or about non-QM products or just any product in general. He truly is an expert here. So please go ahead, put your questions in the Q&A area of the Zoom chat here. Todd, I don't know if we already have some questions in there. If so, would you mind
there was one,
shouting those out?
Sure. No. Aside from the non-QM and construction products you were talking about, what other non-conforming products do you originate? Like other opportunities, I suppose, is what they're trying to get.
Sure. Sure. Yeah, we do it. We do a lot of a fair amount of foreign national loans. Not as many today as we were prior to the rate moves. There was a lot of that going on. Debt, investment property loans, blanket loans. So person wants to buy a property, needs to capture the equity from another property. We will cross collateralize properties even with no down payment, no cash down payment. We will do bridge loans, both consumer and then a lot of our non-consumer or business purpose bridge lending is getting funneled to a new company we set up called Insignia Capital Corp. They're very active in the fix and flip and bridge space. What else? Am I missing anything? Well, interest only is a program, not a loan type. So a lot of interest only, bank statements.
And then what about more commercial properties?
Sure, we do that. So one of the things that's interesting is when you get into the non-QM, and when you get into the more difficult loan transactions and get good at understanding cash flow and financials, and you're dealing with more entrepreneurs, a lot of those people own real estate as well, or looking to buy real estate either for their business or for other reasons. And that non-QM, so traditional, you start at the traditional, you work your way into non-QM, and then you get into start to get into small balance commercial lending, whether it be multifamily, whether it be owner user, whether it be someone trying to buy a small balance apartment building or something that the bigger commercial brokerage shops don't want to deal with. So the non-QM kind of gets you on your way to other stuff. So it's very interesting in that regard. So we do it all here. We don't really turn down anything.
The art of not having to say no.
Yeah, we're comfortable doing it.
I'll find out,
Yeah. And
if I don't already know.
Yeah. I mean, I should quantify in the commercial stuff. Like if someone called us for like a massive deal, like they wouldn't call us anyway. But like we really play in like maybe the under 15 million in this part of town in commercial where we see the value. So
The small balance commercial lending.
yeah.
Kind of area. All right, we have a few more here. Has your lock to fund ratio dropped as a result of non-QM?
No. And I'll tell you why. We don't. One, we're really organized, so the loans are not sitting around for a long time. We do all the work up front. Some of that comes with either a conversation with our sales manager at the lender we're sending the loan to, or a very detailed cover letter saying, "Do you see any issues with this loan? And if so, what would you need?" So, for instance, some lenders on bank statement loans, they want a business narrative, and they want to know what the business is, and does the business have deposits outside of the United States, or is it taking money from outside of the United States? Yeah. And so we identify all that up front, and if it is, we explain it. And so once a loan goes into the system, I mean, I can say we're ready to, we're ready to, our conveyor belt is designed to move quickly. And so no, we're not losing that many loans to rate locks, because rates have only trended for the most part higher. That it could happen though if we get a massive move in treasuries lower for some black swan event, we'll blow out all our locks because that's just a market situation. But then that loan will either get repriced with that lender or it'll get moved to a new lender. I mean, what can you do? So.
Yeah, I know you do a lot of jumbos. I think your average loan size is what, 2.8?
Yeah.
2.8 million. So what's your minimum?
I mean, we'll do anything. The minimum we'll do it. Yeah, we don't say no. Okay. We don't say no. Yeah.
And the quick question: do you partner with other brokers?
On investment and business purpose stuff, yes.
Not
a consumer.
Yeah, sure. So you mentioned when you first started, there was a period where you had to break out as a new loan officer. They are curious, what are some of the tactics you use to break out to help you win realtors and clients' business?
It's really just tenacity. I mean, I'll give you a very quick story. When I was cold calling at my first the mortgage bank I worked for, which I started my career in Nevada under a guy named Nick, what's his last name now? Oh my God, Nick Flores, who now is the president of Cardinal Financial. Brilliant guy. And he said, "You're going to get tested. You got to break through." And I remember this one guy called me, goes, "I want a 6% 30. You get me a 6% 30-year mortgage, I'm yours on a refinance. They'll never go lower than that." And so I checked the markets every day, and it took about 4 months, and finally we got 6%. I called them. I said 6%. That was my first deal off of cold calling. It took about 4 months, and then a weird thing happened. Like I got that deal in the door. I was working in I wanted to start my career someplace where I didn't know people. So I figured if I can do it where I didn't know people, I'd do a lot better where I knew people, and I'd learn the business outside of my network. So I wasn't asking friends to screw up their loans to learn. So I might as well screw up with the strangers. So I got that deal done, and that loan, that gentleman's name was Bob. And then lo and behold, like 2 other people just called me out of the blue and said, "Hey, you've been following up with me. I got a deal for you." So that was kind of how it took, like 4 or 5 months. And, there was a point where I'm like, God, I guess I can go another 5 months like this, but if I can't find a loan, maybe it's just not for me. And lo and behold, that happened. And then another deal happened. And I slowly I found my way in. And I think that's really what the mortgage business is about. You're either going to get rejected or you're going to get accepted. And you got to break through your first few deals, and then you'll know. And I feel like today it's very apropos with what's happening today, because we're coming off of this just such a high volume, morning to night busy type of environment we were in for the last many years, and you're getting tested again. I mean, me and my partner are getting tested. We're out there, doing meetings, doing lunch and learns, sending out marketing flyers, texting old clients. I mean, we are reinventing ourselves yet again. And so that's that's what this business is, and so that's how I started.
Yeah, no, I mean, sticking to your guns and, kind of weathering the storm. It's kind of like the Bubba Gump kind of thing, being that
Yeah.
shrimp boat that's going to last, the cleanse that's coming. I mean, it's already happening. So,
Yeah.
and then hey, Damon, does your team execute on primary A paper borrowers versus non-QM? Can you compete with the big banks on pricing?
Yes. Not on every type of deal, but yes, we do have some relationships, most of which are proprietary, that will go up to, let's say, $4 million, interest only and all that good stuff. Yes, we do. Where we fall off a little bit is obviously if a client is looking to bring a massive relationship over, has a massive relationship with that bank. Sometimes it's a little tough.
Gotcha.
So, but yeah, we're competing on big loans all the time and winning a lot of them.
Gotcha. And then one last one, so when you were starting out, how did you go about finding, non-QM lenders or some of the construction lenders that you ended up working with?
Well, I have a magazine here that's always a good start, Scotsman Guide.
What?
Read it all the time still.
Really?
So it is true. I wouldn't plug it if it wasn't. But researching, Scotsman Guide was a great. Found many lenders through the years there. And also just an idea of what's going on in a neighborhood, not necessarily that exact lender. And then just calling, emailing different banks that you're hearing are doing stuff, seeing if they have a broker platform. Nothing too unique, but lots of follow through.
It's gathering that referral, where people identifying those lenders you're able to send.
Yeah.
So you'll never have to say no to a borrower again, kind of thing. It's great. Well, hey, we are just about out of time here. There are a few kind of questions out there, so if the people do want to have those answered, you're welcome to email any one of us. I'm gonna I want to go back and share this real quick. So oops. Let me get out of there. So bear with me.
Sharing your screen there. Yeah.
I know. I gotta forget it. I'm new. It's my first time. So here's the contact information for everybody. And I did want to just a big thank you to Damon for taking the time.
Sure.
Out from originating all these interesting loans here. And a quick reminder to everybody that all the registered attendees will receive the complimentary subscription to Scotsman Guide, and we'll be sending this PowerPoint deck out via email in the very near future. And again, if any of you have any follow-up questions or require more information, please don't hesitate to reach out to any of us. So thank you again, Dave.
Anybody has a question?
Yes, thank you, Damon.
And if anybody has a question, you feel free to email me. Happy to just say, Scotsman Guide question. I'll get right back to you.
Perfect.
Okay.
Excellent.
Thanks so much.
Thanks again, everyone. Thank you.
All right.
Have a good day.
Bye-bye.